Good morning, everybody. Great to be with you today. I'm back. Of course, yesterday we were supposed to have our bites, but unfortunately, my travel plans were interrupted by a canceled flight Wednesday night, so I wasn't able to make it back here today. But I'm back here today. It's Friday, March 3rd, 2023. Great to be with you. If you're new to the Daily Bites, welcome. My name is Bob Lang, and I run ExplosiveOptions.net. And we had an intro there for the birthday song from the Beatles, and of course, in our chat room we have a birthday today, and we have another special birthday coming on Sunday. Today, happy birthday to Noelle, who's been in our chat room for a while. And on Sunday, March 5th, is my wife's birthday, Leanne. So wishing her a very special and happy birthday. I could wait till Monday's bites, but it's over by then, right? So I think today, please, if you can, if you see her on Twitter, or see her in the chat room, please wish her happy birthday a couple of days early. We'll probably do a big celebration on Sunday and a Twitter fest as well too. So happy birthday, Leanne, and happy birthday to Noelle. So let's go ahead and get started and talk about the markets here for a little bit. So very important day yesterday. So let's talk about it. Last night, let's take a look here. This is the action that happened last night. So it looked like markets were getting clobbered most of the evening after the strong reversal yesterday. We'll talk about that in just a second. But then about 3 o'clock in the morning, we have a big reversal candle here. So we were at 39.75, and in a 5-minute bar took it all the way up to 39.83. So that's 8 handles in about 5 minutes. And we've been moving higher ever since. So we came down to up about 8 or 9 handles. So we're up currently about 16 handles. We closed at 39.84. We were down. So again, we were down 8 or 9 handles here until this closed the gap there. Must have been some news. I think there was overnight. China news or Japan news, or actually European PMIs came out as well. So we do have U.S. PMIs coming out later on this morning at 9:45 Eastern time. ISM data, non-manufacturing, coming out at 10 o'clock in the morning as well too, along with 4 Fed speakers coming out later on today, talking about the economy, inflation, and anything else that might be on their mind, and Fed policy, of course. So a lot to digest today here on Friday. Of course, next week we'll have the jobs report. We'll talk a little bit about that next week. That's on Friday. And then the following week, we have a huge week of inflation data. CPI and PPI are coming out, I believe, on the 14th and 15th of March. So so let's see what happened yesterday. Very interesting action yesterday. Let's look at the SPY on the 5-minute bars. What happened yesterday? So let me fix this up here. So as we see here, the markets opened down, established their low in the first 15-20 minutes. And then we made some higher highs and higher lows, started coming back. But caught another low over here about 394, and then rose up sharply when Atlanta Fed President Bostic came in and said, "Hey, look, I'm in the 25 basis point rate hike camp, right? Not the 50 like everybody else is, and we're starting to see inflation recede." Well, those words managed to push the buyers off the sidelines here, who were waiting for all the selling to happen. Let those sellers get it out of the way, and then pushing right up here. So that was a pretty strong bullish action yesterday, right? Waiting for the sellers to finish, and then coming in and start buying the lower prices, right? And then we had a big surge up to the end of the day, closed near the highs of the session, right? But let's look at this on a daily chart here and see why this is important. So actually, we're going to look at the SPX here, not the SPY. So you can, as you can see here, if you zoom in here, zoom in, make this a little bit bigger. All right, so look what happened. Look at the range yesterday. This white candle here opened at the 200-day moving average, which is this black line here, and we closed at the 50-day moving average. So basically contained within that range, right? 200 and the 50 right here. And we see these reversal candles over here of indecision from last Friday into Monday, right? The big long-legged doji here, another big long-legged doji here, but in the reverse fashion over here. So this is certainly indecision here right around the 50-day moving average. So the market is trying to figure out what is going on at this 50-day moving average, right? Cloud is still green. So the benefit of the doubt still is with the bulls, even though the market had corrected from about 4,200 all the way down to about 39. Let's call it 39.20 or so yesterday. Actually, where's that low yesterday? It was actually 39.28. Okay, that was below the 200-day moving average. So why is this 200-day moving average so important? And the 50 as well too. Let's first of all the 200-day moving average, extremely important level for big institutions, right? So if we go back to January, we saw a lot of big institutional buying here in January, right? A lot of big institutions came in there. We tested that 200-day moving average, came back down hard, and right through it again. So it was this area here at the middle of January, that big, huge drop after the markets opened up in after Martin Luther King Day, and then a huge surge of buying for about 6 or 7 days in a row right here. Big institutional buying over here, right? So this is an area that big institutions want to see hold, right? If we're below here, okay, they have losses, all right? All right. More big institutional buying coming up here as well too. A lot of froth coming in as well, but it was mostly in this box over here where we saw big institutional buying in here. So they don't want to have any rack up any losses. So anything in here in this area is going to get supported in a big way, right? So that's technically what happened over here, and you can see that if you drew a line through yesterday's lows, and you can see where a lot of that buying is concentrated above yesterday. Okay, so anything. I think this area up here is probably going to be some stiff resistance. Let's call it 40.75. I still think that this indicates a false breakdown, but you know what? I'm not too naive to think that things can change, right? We always have to be aware for the conditions to change, right? We don't want to be stubborn and try and push the markets to be our narrative, right? We are below the 20-day moving average, pretty far below it actually. 20-day moving average coming in at about 40.66. So we're about 1.5% below that level right now, if the markets open up right here. One thing that we often hear is that markets don't bottom on a Friday, and that's probably true. It's today being Friday, but we have to be aware that there's been a lot of selling that occurred this week, yesterday, and then Wednesday as well. It's a lot of selling that occurred over here, so we could expect a little bit of a bounce. I don't think this whole bottoming process is done here. However, you know what? Below there, we have some support around the 3,900 level, and then below that, 38.02, which is where we basically started the year. And if we get below there and we break through these December lows, call it about 3750 or so, or 3700, there's going to be a whole mess of trouble. But for now, if we're seeing this area hold right here, just a little, maybe the market just needs some time to work off some of these frothy levels like we had earlier in January, and then some of the selling that's occurred over the past couple of weeks. I do think that again, the choppy action is going to make it very, very difficult to take positions on one side or the other. Now, I think it's a good stock pickers market right now. Look, a lot of the action was to the downside on Wednesday. However, we did see a lot of energy names real strong on Wednesday. So I think you can certainly be choosy and picky about finding sectors that are working and then put some capital there. However, I would be careful trying to ride these things out. We are still mired in a bear market. I don't care what anybody says. I still think it's a bear market. We'll show it. Actually, let me we did have the end of the month on Wednesday, on Tuesday, excuse me. And you know what? We often like to look at the monthly chart and see what's it saying, right? And so here we are, right? Monthly chart. We are still, the black line is still below the red line. That's my marker for saying that are we in a bear market or a bull market. Now it's certainly starting to flatten out here, right? And it could be 2, 3, 4 months before of up moves in the markets before this closes the gap and we get a crossover move, right? Because look what happened in 2020. We crossed under, and then we finally crossed back over, and then we had a confirmation, and it was time to go in. And did we miss out in 2020 on some of these moves up here? Absolutely, right? Sure, we waited until we got confirmation right here, right? Let's see here. We've got the confirmation bar right here, right? We waited for that confirmation to come in here, and then we had a couple of bad months over here, down months over here in September and October, but then up in November and December of 2020, and then into 2021. So did we lose out on 4 months here because there was a lot of uncertainty? Sure, but then what did we have after that? Afterwards, we had a nice run higher after the bull market was confirmed. And when the bear market was confirmed right here, there was some nice downside action in 2022 as well too. So got to wait for the confirmation here, right? Can't go out and say that we had a lot of breath thrusts back in January. Markets are basically back to where they were in the middle of January or early part of January when all those breath thrusts were going on. So a month, 5 weeks, 6 weeks later, where's the beef? Right? What's going on here? I don't understand. If these breath thrusts were so important, where's the buying? Where's the price action? Where are these stocks at? Where are these stocks at? Now I realize that some stocks are going up, sure, right, and it's certainly become a stock picker's market now. However, there's some stocks that are just not performing well. That can just continue to suffer and struggle while the rest of the market is doing well. So if you're a stock picker, that's a great benefit for you. I'm a stock picker as well too. So we're looking for opportunities going forward. So that being said, again, we're still mired in a bear market until this black line crosses the red line and confirms it to the upside. And again, this is starting to flatten out a little bit. Because of the last 4 or 5 months, we've had a couple of up and a couple of down, and starting to trend higher. I mean, if you take a look at this thing one more time, you almost can see that it looks like a bear flag, right? It's kind of a bear flag. So if we break down the next couple months, that's going to delay any bull market getting started. So. So that's going to be it, everyone. I'm going to finish it up here right now, and then wish you guys all a great weekend. And again, I apologize for the delay from yesterday. I didn't get in until late last night, but I'm home now, and we'll be back with another Daily Bites on Monday. Looking forward to spending a little bit of time with you guys then, March 6th, 2023. And it's going to be a great weekend here. Hopefully, it is where you're at. And I appreciate everyone spending a little time. Oh, by the way, sending out Market Blast in a little while. Don't forget to read that. It's got some updated stuff from yesterday. A little bit more in depth from what I talked about today. And again, it's a birthday weekend, and looking forward to spending a little bit of time with Leanne this weekend and giving her all of her birthday presents on Sunday. Noelle, again, happy birthday to you, and we'll catch you guys all on Monday. Okay?